Hey guys, you're welcome to Synthetic Goddess YouTube video. So in this video, I quickly want to share with you a strategy that will give you that is going to give you little probability of losses. Okay, it's going to really help you increase your wins, and then it's going to decrease your losses drastically. So please watch this video till the end so that you can get the strategy clearly, and then you will be able to use it for yourself. Meanwhile, I will be holding a February boot camp. I'll be holding a February boot camp, and if you would love to join, check the description box for the link to my Telegram channel where you can access me, so that I would give you details on the boot camp. So let's go straight to the video. So what I am going to name this is time frame alignment. I'm going to name this time frame alignment, and I'm going to give you explanation on why this time frame alignment is very key, and then I'm going to give you how to use it in your trading life. I'll give you how to see it on charts, how to be able to trade it perfectly, how to trade your time frame alignment perfectly. So just watch this video till the end. And I'm going to be using Volatility 50 index. I trade the synthetic market. If you would love to trade with my broker, the link is also in the description box. So I'll be using Volatility 50 index. And according to what I have always been saying, whenever you want to start any of your analysis, start from the higher time frame. You can start from the monthly time frame, you can start from the weekly time frame, or you start from the daily time frame. So in this video, I'm going to be starting from the weekly time frame, so that we can check the order flow of the market on the weekly time frame. And when we are able to get the order flow of the market on the weekly time frame, we are going to align it with the other time frames, and then we are going to see our high probability setups, how we can check our high probability setups, and how we can enter the trade. So just follow this video till the end. So on the weekly time frame, we've been having series of lower highs and lower lows. Series of lower highs, lower lows simply mean we are in a downtrend. We are in a downtrend on Volatility 50 index on the weekly time frame. And I'm going to just be marking out the last break of structure. I'll be marking out the last break of structure that signified to us that we are in a downtrend. So where is our last break of structure? Here is our last break of structure that signifies that we are in a downtrend. This is the last break of structure. So this is our protected high. Like I am always saying, when you mark out your break of structure, you are marking out your protected high, meaning the high that sponsored the break of structure, the high that sponsored the break of structure, you are going to be marking that out. So this is our protected high. This is our protected high for this break of structure. That is our protected high. We are not expecting the market to come back and break that particular high. This is our internal structure high. This is the internal structure high. So market can decide to do anything, take that area for liquidity. But if that area is a major liquidity, we are not expecting the market to take it. So you can also watch my video on types of liquidity and characteristics of major liquidity. I'm going to link it in the description box also. So if this is a major liquidity, we are not expecting the market to take it out. But basically what I am just going to be using here is our protected low. I'm not going to be checking out for if this is a major liquidity or not. So this is our protected high. Here is our protected high. So simply mean on the weekly time frame we are bearish. You need to write that down. On the weekly time frame we are bearish. Once you go to the daily time frame, the 4 hours time frame, your 1 hour time frame is going to determine the alignment and what you should be looking out for. So let's just check the daily time frame. So on this daily time frame, we are going to be marking our last break of structure and see what is happening in the market and see the alignment with the weekly time frame. So where is our last break of structure on the weekly time frame? We had our last break of structure to the downside on the weekly time frame. So we are going to be marking that out also. So this is our last break of structure to the downside on the daily time frame. Simply mean the daily time frame and the weekly time frame are aligned. the daily and the weekly time frame are aligned. So I'm just going to be marking out the last break of structure on the daily time frame, and I'm going to be marking out my protected high on the daily time frame. So here is my protected high for the daily time frame. It is no longer an internal structure here. It has become my protected high for the daily time frame. So I'm just going to be marking that out as my protected high for the daily time frame. I'll also write that down. Okay, on the weekly time frame, we are bearish on the weekly time frame. So I need to see what is happening on the 4 hours time frame, and 1 hour time frame is going to judge where I am going in the market. So on the 4 hours time frame, now once you are seeing all of this, you can check another time frame, and then it's going to be bullish. Other time frame can be bullish, okay, and that is why you need this time frame alignment for yourself. So on the 4 hours time frame, we need to know the area where the market is on the 4 hours time frame. Particularly on this 4 hours time frame, we had the break of structure to the upside here, meaning we were in an uptrend before, and then we had a protected low. We were in an uptrend on this 4 hours time frame. Meaning the market broke the high, the market broke structure to the upside. Now, based on this time frame, it simply means we are not aligned with the market. We are not aligned with the higher time frame. So we are not just going to be entering the market anyhow. We can't just be entering the market anyhow, because this 4 hours time frame can give a deep correction. It can give a complex corrective wave. So we don't want to really risk entering the market anyhow. Unless you are very, very good with market structure, and then you know where to enter the market, you know where the market will break and give you a change of character. But if you are not so much good in it, you really need to be patient. With the market. So where is our protected low for this particular move to the upside? So we had our protected low here. So that we are not expecting the market to break, and immediately the market breaks it, it simply means we have the 4 hours aligned with the daily and the weekly. So we are trading a risk-free trade. So we have our protected low here. Let me mark it out so clear. So we have our protected low here. Simply mean if market breaks this our protected low, it means we are in a downtrend, and any trade we are going to be taking to the downside here, it simply means we have a risk-free trade. Okay, we have a risk-free trade. So immediately the market broke this structure to the downside on the 4 hours time frame. Now we are not even talking about PO high here, because definitely the market got to a PO high here before breaking that low, but we are talking about time frame alignment here. This is going to change your trading life. It's literally going to change it, because you know what the market is doing. You know that you are trading a risk-free trade. Simply mean you are joining the movement of the market. You are not just entering the market anyhow. So let's just check our 1 hour time frame, and then we are going to align. We will make sure that the 1 hour time frame, the 15 minutes time frame is aligned with the 4 hours time frame, the weekly time frame, and daily time frame. If not, we shouldn't be entering the market anyhow. So immediately the market broke that 4 hours time frame, we are going to look at our last break of structure on the 1 hour time frame. We will look at our last break of structure on the 1 hour time frame. So we had our last break of structure to the downside on the 1 hour time frame. Simply mean any sell we are going to be taking here, any sell we will be taking here, it will be a long sell. Okay, any sell we will be taking from any time frame here. If we get our confirmation on the 15 minutes time frame or on the 30 minutes time frame, it simply means it's going to be a long sell. It's definitely going to be a long sell, because we have the time frame aligned. We have 4 time frames that are aligned together. We have the weekly time frame, we have the daily time frame aligned, we have the 4 hours aligned, even the 1 hour is aligned. So it simply means any sell we'll be taking here is going to be a good sell, and then we are just going to be waiting for that good sell to take our external liquidity. on the weekly time frame. This is our external liquidity on the weekly time frame. So imagine taking a trade around this area and expecting it to break the external liquidity. That is a good move. Yeah, that is a good move. And then you are risking very, very little. I mean, you are risking very little, since all your time frame has aligned with each other. This 4 hours time frame has aligned with each other. So after we broke this 4 hours time frame, we had our last break of structure here. You are looking out to continue the sell. So imagine we had our break of structure here, we had our 4 hours break of structure here, we had our last movement here, and then you've confirmed everything, and then you just check this area. This is a break of structure, possibly on the 30 minutes time frame. This is a break of structure on the 30 minutes time frame, which is totally aligned with our time frame alignment. It is totally aligned. So it simply means you are just bringing out a POI around this area. You know, we had our last break of structure to the downside here. This is our last break of structure to the downside here. We had an inducement here. This is an inducement, and so you're waiting for the market to come back into an area like this so that you can continue your movement to the downside, since all the time frame has aligned. Now let's just check the 15 minutes time frame. Let's check the 15 minutes time frame and see what the market did and how the market also aligned. So on the 15 minutes time frame, okay, so this is the 15 minutes time frame. We had our I, which tested this POI properly, tested the S candle properly. We had the break of structure to the downside, and our break of structure to the downside tested a strong supply zone. We tested a strong supply zone. We had a break of structure to the downside. We tested our SC candle, and this is a break of structure to the downside. This is a break of structure to the downside. We are expecting our market around the SC candle. We are expecting the market around the SC candle. Immediately we had this break of structure, and then we are expecting it around this XC candle. Now on your 5 minutes time frame, you will see this as break of structure to the upside to clear this eye, and come back to your SC candle. And on the 5 minutes time frame, or on the 1 minute time frame, we had a little break of structure here. There was a little break of structure here, which signified to you that we have alignment on the 5 minutes time frame. Also, we are aligned on the 5 minutes time frame. Also, as you can see, all the time frame aligned with each other, and you are trading a very, very low risk free trade. I mean, you're taking a very low risk free trade, and then you know where your TP is. Imagine entering the market around this area, entering the market around this SC candle, and your target is on this 4 hours time frame. It's on this on this daily time frame, to take out this low. On the daily time frame. That is a whole lot of pips. I mean, that is a good number of pips taking out this low. Your lowest lot size here, we give you nothing less than $80. Your lowest lot size, we give you nothing less than $80, and the lowest lot size for this instrument is 3.0. That is the lowest lot size. So your lowest lot size is going to give you nothing less than $80. So you can even use an equity of $10 to open this trade, and then you are risking just $5, and then you are very, very good to go. You know, this time frame alignment is something that is so underrated. You just enter the market anyhow at any time, and then you feel the market is going to go your way. Not even seeing it from the higher time frame perspective, and you're just entering the market anyhow. You've not seen your market aligned with each other. Now this is why patience is very, very key. Patience is extremely key. If you're patient enough, you're going to get a whole lot of risk-free trades. If you are patient enough. But if you are in a hurry, you just want to enter the market anyhow, you are pressurized to enter the market, you just enter the market anyhow, and then you just get out of the market anyhow. That is when you will lose your capital. That is when you will lose your money. But if you are patient enough, that, okay, let me just watch all of this time frame align with each other, and I'm going to get a very good entry for myself, to continue the movement to the downside. Trust me, you are going to see valid setups. You are going to see valid setups. Neglect all of these ones that you've missed. Neglect it. Only this one that you are entering will give you good amounts of money. If you just jump into the market at any area of this place, you're not even sure, and you won't be consistent. You won't be consistent with your strategy. You will never be consistent with your strategy if you are just jumping into the market anyhow. But you know what you're looking out for. You know your time frame alignment that you are looking out for. Immediately the market gives you time frame alignment, you just see the market. You just see the market the way it is presenting it to you. All the time frame as aligned with each other. You know that you are risking very, very little to get very, very much. And then you know where you are targeting. Immediately the market takes out your target, you will notice that you are going to get huge amounts of money than entering the market anyhow based on uncertainty. Okay, you are entering the market anyhow based on uncertainty. But once the market has given you that confirmation that you need to enter the market now, all these time frames are aligned with each other, about 4 to 5 time frames aligned with each other, you will know that this market, I am riding it till it takes out my external liquidity on the daily time frame. And once it takes out your external liquidity on the time frame, you are good to go. So guys, in trading the market, in trading the financial market, patience is really needed, and you need to watch out your alignments. Trust me, if you get this alignment, your trading life is going to change. Your trading life will totally change if you get this alignment, because time frame alignment is very, very key. It gives you peace of mind, it gives you confirmation, and it gives you a risk-free trade. It gives you a risk-free trade. That is what this time frame alignment does for you. So guys, if you really enjoyed this video, kindly drop me a like and then comment in the comment section. Let me know if you enjoyed the video. If you have any question, drop it in the comment section. I'm going to see you in the next video. That's going to be all for this video. I'll see you in the next video, guys. Have a lovely trading week. Bye guys.